Good morning. Welcome to another segment of Financially Speaking. I'm your host, Drexwell, Seymour. It's such a great pleasure, as always, to be in your company. Before I get into the show, I know there are concerns about the stimulus payments. I understand that people are concerned about the long lines. I am too. I went to the Treasury last week, not to collect any stimulus. I went to pay accommodation tax for one of my clients because we can't pay online. Of course, we could transfer the money online, but I went intentionally because I could use my credit card and I get my points. And so the line was so long. And I say to myself, why don't they just put this money on people's accounts? Why do people have to stand in lines for this? I don't understand the purpose. I don't understand why people have to stand in line to collect $500. And I turn this out to the next time they give stimulus, please find a way where the money can go directly to the account holder. I mean, you have most of our accounts already. I'm not going to stand in line for $500. I know, but I realize though that there is a need for that $500 because of the length, because of the queue in that treasury. It tells me that people really need this $500. And so people are willing to stand in line to get it because they need it. They want it and they need it. But we have to find a better way of paying people that money. Get it? Well, on the application form, there should be an account number so the money can be there. Now, I don't know if they're doing this because they believe that people are collecting money that doesn't belong to them, and so they want to make sure the person that collects the money is the person. But then you have students who are abroad who probably apply. They cannot come and get it. And then, the check is only valid for 6 months. I mean, I don't know if they come for Christmas. But that is something that we need to go to look into, investigate further. Pay the money directly to person's account rather than having people stand in line. And with that said, I want to welcome this is the first time our guest is appearing. I will let her introduce herself. We're going to be talking about investment. And I know a lot of us most times when we think of investment, we just think about putting money on a CD or something like that. But we have someone here who is well-versed, well-experienced, a consultant in investing. And so I want to introduce you guys. I'll let her introduce herself, but her name is Tishrea Johnson. So with that, I want to welcome Tishrea to the Financially Speaking show. Tishrea, welcome to Financially Speaking.
Thank you. Thank you so much, Drexwell. It's a pleasure to be here. So yes, my name is Tishrea Johnson. I have been in...
I pronounced your name wrong?
But it's fine.
Okay,
sorry
about that.
At this point, I've heard so many variations. I know you're talking to me, and so I'm like, yes, I just respond.
Okay.
But Tish is fine.
All right.
All right. So yes, I've been in banking for quite a few. Can I ask you, I just want to make sure I am looking at the correct camera.
Here you are.
Right here.
Mm-hmm.
Okay. Mm-hmm. So I've been in investment banking for 14 years, but prior to that, I was in commercial banking for 10. So my role in banking has always been client-facing. It's always been helping clients, either gain wealth, manage wealth, whether it's savings. I've also been in the lending area. So I've had quite a few roles over the years as far as banking goes. But I always tell persons, I did not mean to end up in banking. Banking sort of found me.
That happens.
Right?
Mm-hmm.
I was supposed to spend 1 year in banking while I went to school. And then 1 year turned into 2, and then, I started to enjoy it, got my degree in that area, and here we are.
Yeah. So where do you work now?
Okay, so currently I work at RF Bank and Trust when I was in the Bahamas.
Mm-hmm.
Okay, I worked there for quite some time. So I'm trying to make a transition over now into the Turks and Caicos area. Summit Investment Advisors.
Yeah.
So it's a company that looks at advising customers about whatever options out there.
Mm-hmm.
Okay, so we look at I basically do research. And so when I meet with clients, I'm able to say, okay, well, here's a product that I found, or here's something that may be of interest that can help you. And so that was the transition for me.
Okay.
Right.
Okay. All right. So why should people invest? Why should people invest in different products and services? Why should they do that?
Okay, so investing is, in this economy, the main reason is to stay ahead of the inflation problem, okay?
Okay.
And in simple terms, inflation is the power of your dollar, okay? So 10 years ago, you went to the grocery store, $100 got you a lot more than it did today.
True.
And moving down to Turks, it gets me even less. The prices in the store are something I had to get used to.
Welcome to Turks and Caicos.
Right? So investing makes sure that you earn enough so that that dollar is able to continue to meet that need that you have, and even then some. That's the purpose of investing.
Yeah, and then we don't know the future. We don't know, the future. We may be doing well now, and we may live with regrets by not investing your money.
Right.
Because you may have losing your investment, losing your job. You don't have the income coming in, but at least the money that you invest, hopefully you have enough to help you.
I'm telling you. Because I've had numerous clients in the past. They invested money, they did well, and then a lot of them got sick. This one had cancer. Yes, and so it was a good thing that they had that investment to dip into, because a lot of times health insurance only goes so far. After a while, a lot of them say, hey,
you have a deductible.
Then this is where we stop.
And then some of us don't have health insurance, depending on the nature of your illness.
Exactly. It may not even cover it.
Yeah.
So life circumstances are constantly changing, and the more of a cushion you have, the better. So yes, that's another reason why you definitely, want to have some investments. Yeah.
And a lot of us are just leaving our money in the banks, right? And we're not getting anything.
No.
We have money. Some of us have money. And those that have money, we're leaving in the bank, and there's nothing to talk about. It's probably less than 1%. It's probably less than 0.1%. Less than 0.5%. So you might as well find a way to make a return on that money. Other than leaving it there and say I can put on a CD, stuff like that.
I agree.
Yeah.
I'm not going to. Well, I don't want to pay the bank to hold my money for me. I'd rather do it. My grandparents did. Put it under the mattress.
Hey.
I can hold it for myself for free. But if you pay me a little nothing, and then the $7 or the $8 monthly fees coming out, at that point you are paying the bank just to hold your money for you.
Yeah, because you are paying a fee every month.
You are.
You are paying a fee every month.
Yeah, regardless.
Those paying charges.
And they continue to grow steadily. So at some point, you're just losing.
Yeah.
And so that is really what was the catalyst that sort of grew the investment business for me. Prior to fixed deposits dropping, it was a little bit harder getting persons to pay attention to investing. But when persons saw that, it just doesn't make sense anymore, they started looking at different avenues. How can I make this, especially persons retired too, how can I make this money last, Because a lot of persons continue to work after they retire, of course, but even then, you want maybe on a fixed income, maybe, you just want to know that, hey, if I live for another 20, 30 years, do I have enough to sustain me,
Yeah, you have to look long term. You have to look long term.
You do.
So can you share with us some products or services you can recommend people, and also can you tell people how they can reach you as well for more advice? Because obviously the show would not be able to we don't have enough time to cover everything, but tell us how we can reach you, get in contact with you, because I think it's very critical for us to think beyond having money in the bank, to think about beyond the CD, and find ways and means to grow your money.
Right.
Yeah.
So the easiest way to reach me is by email. You can reach me at summitinvestorstci@gmail.com. And then
Summit Invest.
SummitInvestors, summitinvestorstci@gmail.com.
All right. So Summit Investors,
Yes,
TCI@gmail.com.
right. And then I also have a number here. I'm
local
sorry.
number?
Yes, a local number. I'm still trying to get used to it.
Yeah.
Give me a minute, I'll get back to the number.
No problem.
Okay?
Yeah.
But email definitely. So, remind me of the other question, please.
What sort of advice you give people to invest? I mean, what sort of
In products.
and services?
Okay.
And you could just briefly tell us. And
Yeah.
then of course, when they call you,
You
reach
could
out
go
to
into
you.
more details.
Uh-huh.
Okay. So, of course, this is the USD denominated market.
Yeah.
So that's the type of investments that I would discuss with you. You have options where you have ETF strategies, and without going into too much detail, it allows you to choose how much risk you want to take, basically. An ETF is, think of it like a bundle
What
of...
is an ETF?
Yes, exchange traded fund. Think of it...
Exchange traded fund.
Yes.
All right.
Think of it like a bundle of a basket of investments, and then it allows you a couple of benefits. Right? You're diversified automatically, okay? So instead of purchasing in one stock or this stock, or you're in a lot of different countries, a lot of different products.
So it's a diversified
basket of items,
basket.
right?
Okay.
And then the other thing is the other benefit is it's a lower cost to you. So having to buy these things individually would be a lot more than having to purchase the actual exchange traded fund. Okay, so they have a more conservative version, for example, where you can invest in things we call fixed income assets, like your government bonds and your corporate preference shares. Then you probably a balanced version of the exchange traded fund, but allows you to have that same safety, but with equities you have a little bit more growth.
Okay.
Okay, and then it progresses to a purely aggressive type of investment, with just purely equities. So a part of investing is knowing two things: mainly what your objective is, and then also what your risk tolerance is. You know. Some persons have objectives that don't match their risk tolerance, you know.
Yeah.
But the key thing.
So break that down first. What
Right.
do you mean by that? The risk tolerance would break for people watching the show. You said it all depends on your
Risk tolerance.
Yeah.
Okay.
And the risk that you take. I mean, break persons watching. What do you mean by that?
Okay. So, your risk tolerance is how much. Well, let me start over. When you deal with investing, risk and return have a trade-off, okay? So the more risk you're willing to take on, the more likely your return will be a little bit higher over time.
Okay, so the greater the risk, the greater the reward.
Right.
Okay.
So you could be a conservative person, that is fine, but you have to be comfortable with saying, okay, I am okay with the conservative rate, okay? And that's why, you know, the being able to do a combination is always good.
Yeah.
You know, because some persons, you're not altogether conservative, you're not altogether aggressive, but you do want to earn a little bit more.
Yeah.
But then you have persons who come in, I want to make $1 million in 2 years, whatever the case may be, but I only want fixed income. It doesn't work that way, you know? It's a trade-off.
All right. Right. I understand. Yeah. So
Right.
So the more risk we take, more potential to get a greater earning.
Yes, over the long term, yes.
Now, people watching the show, they may be concerned about investment because they are in their comfort zone. They've had their money in the bank, and they know it's there, and they don't want to take it out based on advice from you or anyone else because they're afraid that they may lose it.
Right.
What sort of confidence or assurance you could give them that it's safe,
Okay.
it's secure?
All right. So,
You understand what I'm saying?
I understand what you're saying. There's always risk with investments.
Yeah. Even having the money in the bank is a risk too.
Right.
Yeah.
Right. That's an interest rate risk.
Yeah.
You know, you don't earn as much as you used to. But with the ETFs, for example, you are not locked into this investment. You can follow it along, and if you are not happy with what's happening, if you feel like, oh, it's been 3 quarters, it's been a year, and I'm continuing to lose, you can come out of the ETFs.
All right.
Okay? So
they will have access to they can see the movement, they can see what's happening on the investment.
Right. So once you invest in any of these U.S. products that I am talking about here, you will automatically have online banking. So you'll be able to log in, you'll be able to see what your investments are doing, how they're performing. You'll also get a quarterly report. So you'll be able to see every quarter what your earnings are, why it's earned, what it's earned. You'll have ample information, okay? But that's the main thing I tell clients. You don't have to sit there and watch your money disappear. And that's another beauty of the, like I said, of the ETFs. I'm sorry. That's another beauty of the ETFs. So that's one confidence.
Okay.
And then the companies that I represent are reputable companies. These aren't places that just opened up overnight. They've been open for 20, 25 plus years.
Okay, that's a good reassurance.
Yes, they have a consistent record of earning clients consistent returns, good returns over the years, okay? And the executive team, and it's with any type of investment. I always say, look at who is running the company. That's the first thing. If these are persons you don't feel confident in, probably want to stay clear. These should be persons who are foremost authorities in their industry. They have a proven track record. They worked at other companies in executive positions where they've helped those companies grow. And so that's the type of companies that I tend to refer persons to.
So these are well-established companies that will be investing our funds with.
Yes.
Right. And you say that we don't have to stay in if we don't like the performance.
No.
We can come out.
You can come out at any time.
Without a penalty?
No. Now there are redemption fees. There are redemption fees. I don't know if it's listed on there, but it's not a lot. The redemption fee is 0.5%.
0.5%.
Right.
And okay, in addition to the ETF, are there other products? I mean, for example, people watching the show, and they may not have a lot of money, but they want to put their money in something, right? Is there a minimum amount that they have to invest? Because there are people who have little or none, but they still want
to do something
with it.
Okay.
Yeah.
Now, I would say if we're talking about less than 5,000?
5,000 or more.
Okay. So 5,000 or more, definitely you're able to invest.
If it's less than 5,000, probably not.
Probably not. And I don't encourage it either.
I just want to put that, because there might be people who have less than 5. Yeah.
Right. That's
don't
why.
have anything at all. But
Right. So that's why I asked. If you have less than 5,000, I would say establish a consistent savings.
Try reach to 5,000.
Reach to 5,000, because then at that point you're probably disciplined enough to put it in an investment anyway and not touch it. Okay. But it's as little as $5,000 to start. The ETF start at 5,000, and then if you have a little bit more, there is a income bond investment that starts at 10,000.
Okay.
It's called the E-Capital Income Bond.
ETF Capital?
No, E-Capital.
Oh, E-Capital.
Income Bond. Okay. So if you have a little bit more, a lot of persons have gravitated towards this investment, primarily because it is locked in at 11.75%.
Oh, that's a good rate. 11.75%.
That is almost unheard of in the current market. Okay.
Wow, that's good.
Yes. It is a 3-year investment, so it's not ongoing.
Okay.
The company did want to make sure.
So you lock in for 3 years?
Yes, 3 years. It pays monthly dividend payments. So every month, like clockwork, on the 30th or the 31st, you'll see where money goes into your cash account. Okay. Number one question I get is, do I have to take the cash? Yes, you have to take the cash, but you can reinvest it. You can
What do you
tell
mean? You mean the interest?
the dividend payment.
So, okay, so when you get the dividend payment, the dividend doesn't, are you saying it doesn't go on the account? It's a separate payment to you?
Yes.
Really?
It goes into a cash account where it is not earning anything.
Oh, okay.
But
So we'll have two accounts then?
Well, no. With the brokerage account, you have the securities, and then you have a cash account. You have two accounts. Your
Okay.
securities account.
Right, okay, that's what I meant. Yeah.
Right. So
okay.
it's one account number, but then you'll see those
And the
two
cash
divisions.
account is the dividend.
Yes.
And we could, whatever our dividends are each month, we could take those dividends and reinvest it
If you want
to the
to.
securities.
Right, if you want to. Some persons, like my business owners, especially with cash-heavy businesses, every month they tell me, transfer to my bank, you know? But of
Okay.
course, if you want to reinvest it, you can.
And then, okay, then, and this e-capital, this one that you're talking about, the 10,000 is locked in for 3 years. So after 3 years, you could get the $10,000 back, or you can reinvest.
You are paid the $10,000 back. But at that point, you can then fill out the form and say, hey, reinvest it for me.
All right, but
Yes.
obviously you'll be getting your dividends every month anyway.
Yes,
Oh, okay.
exactly.
Okay.
So it's very straightforward. It's a short investment, higher return, great if you need income, especially persons who, like I said, business owners, persons who are already retired, they maybe want to put something a little bit higher earning. It's great for that. Okay. The ETF strategies is for growth. So those returns are applied to your principal every month,
Yeah.
and it's compounded monthly.
Okay.
So if you want growth, ETFs. If you want income, back to e-capital.
Okay.
All right.
Do you also offer like private pension plans? Do you offer that?
We do offer private pension plans, but not in they don't have it in the USD market. They do
Oh,
not
okay.
have it for the USD market
Okay.
as yet.
Okay.
Okay. But when I get that question from persons, because I'm talking to someone right now, actually a gentleman in Canada, I told him it's actually a good thing if you look at it, because you can actually build your own pension plan, as
Okay.
opposed to us having something already structured for you.
Okay, so based on your investment, you can build your own pension plan.
Whatever you want, however you want it built, you can do it. So it has its benefits.
Okay.
Okay. And then even saying how often you want to get dividend payments once you retire. You know,
Yeah.
that's something else that you can build into it,
Yeah.
you know.
Yeah. Because a lot of us are reaching that retirement age, and there are many people who are working, of course, who are, you know, on the national. We have a national insurance plan.
Right, right.
It's 12%. I think the employer is 5.5. I think the employer is 6.5. Yeah, it's something like that. 12%. And there's a cap at $4,000 which you pay on.
Okay, okay.
All right, and I think you get up to 60% if I'm not sure. But whatever the case is, it's good, but it's still not enough. It's not enough for us unless you have other investment incomes. But if those people are just relying totally on national
No.
insurance, it's not enough.
No,
And so it's important for us to find other means of investment.
yes.
So when you reach retirement age, you'll be able to sustain that or maintain that living,
Yeah.
that standard of living that you have right now.
Definitely.
Yeah.
You know, governments will always try to help their persons, I guess, as best as they can, but it'll never be enough to
No, it's
say,
not enough.
sustain
It's
you.
not enough. Yeah.
And if it's anything like the National Insurance Plan in the Bahamas, you know, they're saying that eventually in the coming years it may be depleted, you know. We're hoping it doesn't get to that point.
Yeah,
And
here
don't
I
know
think
if
we're okay
Turks-
so far here.
I was going to say, I don't know what
Yeah,
it's like
we're
here.
good so far. Yeah.
But even if it's not to the point where it's getting depleted, it definitely will not be enough. You still have
No, it's not enough.
You still have to go to the doctor, you still have to
Yeah.
buy medicines, you have groceries to buy. It's not
Yeah.
enough. Right.
So imagine you have, say, it's 60% of 4,000 is what? What is that? That's around 20.
60% of it, so
40, that's
4,000
like
to
2,400?
2,000, so 20, yeah,
So imagine the most you could get. Let's see.
that's the most.
It's $2,400 a month.
Yeah,
You know how much you're getting paid. You know how much your income is now. You have a job. You know how much. So you're getting, I don't know, $7,000, $8,000 a month.
right.
But when you reach retirement age, and you work and you have to retire, you're not going to get that income anymore.
No.
So you have to find other ways.
Right. So the rule of thumb is with retirement, you generally need about 80% of your pre-retirement
80%?
income. 80%
That's the rule
of
of
it.
thumb? Okay.
And we save about 20 years after you retire.
Yeah. Because a lot of us are not saving.
No, no.
We are not saving. Sometimes we wait when we realize,
Time is running up.
yeah. And so this is a great opportunity for people to invest.
Yeah.
Yeah.
And you know, people always say, well, when is a good time to start investing? It's always a good time to start investing. And then I'm glad you said, you know, early in the show that you don't need a lot. Because some people take long because they feel like, oh, I need 100,000, I need 50,000. But you don't need that large amount to start. And another thing is, consistency plays a big role in growing your investment portfolio.
Yeah.
A little bit goes a long way. It's not always that big amount, it's that consistent amount
Yeah.
over time. you
Yeah.
know?
And we need to be, whatever we do, we should be consistent.
But yes.
You know, not only for investment purposes, it's a key principle.
Yeah.
And to be successful, you need to be consistent.
Yeah,
You know.
I'm not consistent with my diet, Drexwell. You know, you
Hey!
try, and sometimes you fail, but you get up again.
Yeah,
you know.
you can't give up.
Yes.
Someone asked a question.
Yes.
I mean, I can't answer it. What is the greater peak of investment? I guess I don't
Greater
know. What,
peak.
maybe the best time to invest. I don't know.
Okay.
What is the greater peak? I'm not sure.
Okay.
Exactly what the question is.
So-
But that's the question. I'm not sure exactly what they mean.
The greater peak. Okay, well, if what they mean is if they do mean the best time, then you know it's always better to buy when it's low and sell when it's high. So people tend to shy away when they see markets aren't performing well. And it's about timing as well. So that's why it's always good to have someone who is in the field to sort of guide you. But it's always better when you can come in on an investment when it is not performing its best. And then when it starts to bounce back, you earn that return. And so it has to do with also like the type of investment in the company. So if you know it's a company, for example, it's a mortgage company, people always buying and selling in real estate. So, sorry, not a mortgage company, a bank that does mortgages. Maybe their shares aren't performing well at this time.
Yeah.
But you know, it's a bank that's been around a long time. Real estate is going to continue to happen. So it's just a matter of time before these shares bounce back. So that would be a good example of, hey, these shares aren't performing well. Let me put a few in here. And over time, you don't have to buy a lot one time. Buy a few in the next couple of months. And then as the share prices, you know, bounce back, you earn a huge return. So I'm not sure if that's what they were alluding to, and if it wasn't, please ask them to explain it a little.
No problem.
You can go ahead
Well,
and explain. Yeah.
he's watching, he or she,
Yeah.
they're watching the show.
Right.
I'm not sure,
Okay.
you know,
So
who
hopefully
it is.
they'll.
But they're watching the show.
Okay.
And so they're listening.
Okay.
So if it's not clear what you said, they can
Right.
come back
Sure.
with a follow-up question. Because
yes.
I'm not sure exactly what
What
they
they
mean.
meant. Yeah.
By the peak, I'm assuming they mean
Yeah.
when is the best time. I don't know.
That
But
makes
yeah.
sense.
Yeah.
Yeah. The optimal time.
Yeah.
The answers, like I said, it's always a good time.
Yeah.
Yeah.
I think people should invest now. I
Right.
think people should invest now.
Yes.
It's just it's a risk we take,
Yeah.
but I think it's a risk that's worth
Yeah.
taking. You know.
And it's a calculated risk. It's calculated. So you don't just throw everything into one company,
No.
because if that company fails,
Right.
so it's not just, the risk is mitigated,
Yeah.
you know, so it's not gambling. It's mitigated risk taking when it comes to investments.
Yeah. But as an advisor, you will advise your clients.
Yes.
What do you think is best for them
Definitely,
to invest in?
definitely. And you know, one of the things I've always prided myself on was having integrity when I invested, when I gave advice to clients. So some products might have earned me a higher return, but I know, okay, this product is not good for you, or maybe maybe another company has a product that's better for you. So, you want to find someone who does that,
Yeah.
who has your best interest at heart. And then as you look around and you shop around, you always want to do what's best for your pocket, for your money as well, do what's best for you.
Yeah. Yeah.
So it doesn't matter if I'm here quoting 11%, 10%, 9%, what is best for your goals, your objectives, where you want to see yourself in the future,
Yeah. Yeah.
Because everyone's idea of success or everyone's goal is different.
Yeah.
Everyone's
yeah.
goal is different.
Yeah. Yeah.
So what works best for you?
Yeah. Is there like a minimum age requirement for someone to set up an account with? I mean,
To do investments?
yeah. I mean, because a lot of people they think about their kids and they might want to invest. And they may
Okay.
want to put in their children's name and stuff like that.
Okay.
Is there a minimum age?
Yes, you have to be 18. You have
18
to
or
be
older?
18, yes.
Okay. Okay.
So what I tell persons is you would definitely need to put this in a will
Okay.
if you want it for your children later on, okay? But definitely once your children reach that age of 18, you can add them to the account, but you have to be at least 18 years old.
You have to be at least 18.
Yes.
And it has to be in individual names, or can it be in company names as well, the investment?
It can be in company names.
It can be in
It can definitely be in company names. I'm glad you brought up companies as well. You can do private wealth. Private wealth is an option. And then you can also do what is called investment management.
Okay, so what is private wealth and what is
Right.
investment management?
Right. So if you are opening for an account for a company, you can just open an account for your company, for yourself, and say, okay, I want to invest in this ETF. Give me some capital. Or you can say, okay, I want to be in your investment management account, where you have a trained professional who manages just your portfolio for you. At the beginning, you two sit down and you say, okay, what do you want from this investment? You actually build a portfolio. You say, I want this type of return, or maybe I want this type of growth. They actually build a portfolio just for you, as opposed to just putting you into a specific generic ETF, okay? So as a corporation, yes, you can definitely open an account. As an individual, once again, you can just open up your individual account and say, hey, this is what I want, or you can do private wealth, where you have your own personal manager,
Yeah.
builds that portfolio for you. And a lot of persons, it's a little bit more to start, of course, but persons who are in that high net worth persons who are in that category, they definitely prefer it. They like being able to get on the phone and call someone, or having someone call them and say, hey, this is what's available, this is what your account is doing. They like that. And there's a lot of perks and benefits that come with it, So you have corporate accounts, and we do have individual accounts.
Okay.
Yes.
Okay, good. For those of you just, tuning into Financially Speaking, my guest is Tish Johnson from Summit Investment. Tish has been around for a while in the field, so she knows, the area.
Yes.
And so we are having this show today to encourage you to invest outside the tradition that we normally do. Some of us just have money, as I mentioned in the beginning of the show, we have just money sitting on the bank. And every time you look at it, it's not moving because you're not getting any interest. And if you get interest, it's probably 2 cents or 3 cents. And this is an opportunity for you now to say, wait a minute. This money, I could grow this money. I could grow this money. And so we're encouraging you to invest your money, get advice, proper advice, invest your money so you can get a return on your investment. If you have money, $5,000 or more, do something with it, because we just don't know. We don't know what tomorrow will bring. We are taking our jobs for granted. We're taking our business for granted. We just don't know. But if you could make some investment income, it might not, take you where you want to take you, but it will help you. And that's what this show is about today, to encourage you to invest in some products and services to get some investment income on your money, rather than having your money in the bank and it's not doing anything with it. And so I think it's a great opportunity if you want to reach Tish. Is Summit Invest TCI
Yes.
at
I wanted to.
gmail.com, right?
Right. I pulled it up. I have it here. Sorry. It's Summit Investor Advisors.
Okay, Summit Investors.
Summit Investor Advisors.
Oh, okay.
SUMMITINVESTOR Advisors with an S. TCI@gmail.com. So I'll say it one more time. Summit Investor Advisors, TCI@gmail.com. And my cell contact is 649-341-2149. And yeah, Drexwell, I just want to say, my whole purpose for coming out today is just to educate people.
Yes.
It's just to educate people. And the thing what persons don't really see is that what investment also provides for you is opportunities. When I first started in banking years ago, at 18, 19, my first customer, and I'm not going to take long, but I just want
No,
to...
that's okay. That's okay.
I just want to add this little story. Her and her husband, by the time I met them, were multimillionaires. They owned real estate in various oceanfront real estate property. And she said, when she started working, she would save $5 out of every paycheck. Like, she wasn't making much because she was an older lady, so, salaries weren't much. She would save $5, and she just continued that trend. As she started making more, of course, she would save more.
Right. That's what I encourage people to,
Yeah. Never spend all your money. even if all you can put, I know a person say, I have a lot of debt. I get that. But if it's $5 you can save, I'd rather you save 5 than 0. But what happened is, over time, her asset grew. And so when opportunities presented itself to buy property, while someone else would have to wait on the bank to get a loan, she was able to go to the person and say, okay, you want $60,000, I could give you $30,000 cash. And this is how their wealth grew over time. So it provides you opportunities. So don't think you're just locked into these investments, these 1 or 2 investments I'm talking about here. Real estate is an investment. Business is an investment. So what this provides you is the opportunity to do other things that you want to do later in life. Like I said earlier, not everyone who retires from their full-time 9-to-5 job, they stop working. They continue on in their business, and help grow that and pass that on to their children, creating generational wealth. So these are the things that I want you to think about when you think about investing and you feel like, oh, I just can't do it. It's just like, what do you want from it, and what do you want from yourself, for yourself? And then that sort of keeps you focused. The vision board, or put it up on a mirror, put it up where you can see it. So when you're tempted to say, oh, I don't know if I can do it this month, you're reminded, this is why I'm doing it, this is why I'm making this sacrifice, you know?
Yeah. Yeah, I mean, because you don't want to, live with regrets.
Right.
I know a lot of us wish we had done things differently, but we can't go back. But we can move forward. And so now is the time for us to move forward. No matter how young or how old you are, it's okay. You can start now. Someone wants to know where the headquarters for your investment platform is located.
Okay, well, I recently relocated to TCI. So currently, Mr. Seymour has been gracious enough to let me work from HLB if I have clients that want to be with me here. Now, like I said, I represent various companies. So the banks that I represent, they have headquarters in the Bahamas, they have headquarters in Cayman, they have headquarters in Barbados. So depending on which product you choose, of course, I'll let you know who's the bank, the history, where they're headquartered, and so you will know who it is who's investing your money for you, definitely.
Okay. Yeah. Is there anything else you think that we need to bring awareness to people watching the show that you think we?
No, I think we touched it. You know, whether you're young or old, I always say it as life, there's hope. And maybe you are not that person to bring generational wealth to your family, but you're the person who's the catalyst. Maybe you're the person who gets it going, and then your grandchildren see it or your children see it and say, hey, look at what they started, and they continue it. So, we all are on a journey, and it's never too late to improve ourselves. It's never too late to invest.
Yeah.
So that
But
of course,
I'm going to make an investment. I know you say you have the e-capital.
right.
I believe in diversification. Of course, I do not know much about, investing in a lot of products and services. I always talk about real estate. But I'm also going to be investing now in different portfolios. And I think it's good to, if you're in a position to diversify your portfolio. Don't just be investing in one area. And the good thing about what Tish is offering to you, the products that she's recommending to you will be diversified. It's not just one. It'll be a diversified set. And so I'm going to do it, and I'm encouraging you to do it as well. I mean, we need to have better control of our finances. We need more money. We need to generate more money. We need to manage more money. We don't need to be reaching retirement age and then trying to find out where our next dollar is coming from. When we reach retirement age, we should be in a position where we just do what you want to do. Just travel the world. Just get up when you want to get up. Knowing that you have nothing to worry about when it comes to finances because you are intact with your finances. That's the position that we also strive for. You should, if you're working past retirement, it should be something that you want to do to keep you occupied. It shouldn't be something that you have to do. And I know some of us have to do it because we're not in a financial position. Some of us are still paying mortgage, while we're retired. And so I know that you have to do that. But those of you who haven't retired yet, when you're reaching that point in your life, now is the time to plan. So now is the time to invest. So when you reach retirement age, you do not have to do what other people are doing. You can get up when you want to get up, go where you want to go, and not worry about showing up to work, whatever. And that's what the whole thing is about. And this is where managing your finances come into, making sure you do the right thing. So you're equipping yourself and also helping your generation, your children and grandchildren. Some of your children might not be well. They might have health issues, God forbid, and they might not be able to even have a job. But you have equipped yourself, and God forbid if you die and leave them behind, at least there's enough money in the pot to take care of that child who's not well.
Yeah.
And that's what we need to focus on, equipping ourselves for the future.
And if you have kids who are 18, 19, just entering the workforce, I always encourage my customers just push them, run them over to me, because I have a chart where I show them by the time they're 40 or 45, they could be a millionaire. Because when you're young, you don't have the bills. You have more time.
Yeah.
So if they're that age where they just started working and they haven't gotten into debt, send them to me immediately so we could start working on that plan. Because that's a legacy I always said I want to leave behind. I wanted to leave behind a lot of multi-millionaires, a lot of Black, Caribbean, multi-millionaires.
Yes. We need that.
That is my legacy I want to leave behind.
We need that.
Yeah.
And I'm glad you bring the point about young people. Because a lot of young people are doing well. I know they complain about their salary.
Yes.
But some young people are doing well. Even those who are working for the public sector, the government, they're doing well. But what they're not doing well, just like the older folks, we're not managing our money properly. Some of you are living in your parents' home, and you're still crying at your birth, even before the next paycheck. We need to manage our finances, and this by investing, putting something away for 3 years, is going to force you to save.
Yes.
Think of this as a forced means of savings. Because others I can't save, because every time you see something You want to order it. You go on whatever these Shein, whatever. You order. We're not controlling ourselves.
Right.
We're not disciplining ourselves. And this, by investing, you're able to discipline and control yourself, knowing that you have this money on this account.
And you cannot touch it.
You can't touch it.
Yes.
And that's a forced way. And that's what we have to do. So I encourage you to do it. So reach out to Tish. She'll advise you. Or you can come by our office at HLB. She's there temporarily until she finds a permanent space.
Exactly.
And she gave her number as well. You can reach me if you don't remember the number. And because we need more of us to be well off financially.
Yes.
I tell you, we need to reach a point in our lives here in Turks and Caicos where we don't need to rely on international investors. We need more local investors. In order to have more local investors, you need money. In order to have money, whatever you're doing, you need to have your money grow.
Yeah.
And that's what it's all about, growing what you have. And it's possible. You can. Any closing remarks, Tish?
I think I covered everything.
You covered everything?
Yes.
Okay.
So if you want to reach out to me with any of your questions, please do. But yeah, I really enjoyed being here today. I hope someone learned something and I was able to impart some of the knowledge that I have. And I look forward to hearing from various persons in the community.
Yes. I'm quite sure you made a difference. We need to start thinking. We need to stop spending a lot of money on these consumables. We're spending too much money on clothing. We're spending too much money on shoes. We're spending too much money on all these vacations and stuff like that. We spend too much money eating out.
Yeah,
If you're
that's a big one.
single, maybe it's cheaper to eat out. I don't know. We need to start investing. We need to start saving. We really need to. And let's just stop talking about it. Let's do something about it. We really need to start doing better with our finances. We really need to. There are many opportunities in this country. There are so many opportunities. And I know a lot of us, we cannot afford the opportunities because we don't have the money. But we can reach that point where we can have the money to invest. We need to take control of our lives. We need to take control of our spending. We need to take control of our savings. And I like the example that Tish gave with the lady said she was only saving $5 out of every paycheck. I encourage people to save at least $1 a day. You know what I mean? If you could do that, it makes a whole lot of difference. And you don't have to be working so long.
Or
You
so
can
hard.
retire. I think in government, if you work 30 years, I think you'll retire. But some will continue because of financial situations or because that's what you want to do. I'm just saying, the whole idea is to equip yourself so you can become better financially. Thank you for watching Financially Speaking. I'm your host, Drexwell Seymour, and my guest was Tish, and we'll be back next Tuesday, same time at 11 a.m. Thank you again.